this Joe Biden capital gain story. I don't want to call it Joe Biden because I feel like that's kind of politicizing it. It's more Treasury Department, but it is, obviously he's the president, so falls on his shoulders. This is interesting. I read this article this morning that this is going to be a record-breaking year for tax revenue, just short of $3 trillion. Yep. With a T.
I got you. Funny.
Shout out to Birdman.
That was your patois coming out.
He would be very proud of me. And a portion of that, a pretty sizable portion of that, is short-term capital gains tax. So this is where the plot thickens because everybody was going crazy with day trading last year. Of course, we had the meme stock situation, short-term options, and a lot of people didn't realize that they would have to pay hefty tax bills up to 37% on short-term capital gains. So, a lot of people were saying like, everybody's making money on options. The government's going to regulate it. Well, maybe not. Maybe not. If they have a record-breaking year of revenue and people are, paying. And then, like I said, most of the time people doing short-term trades actually lose. So if you're losing, then Wall Street's making money.
The broker's making money.
Yeah. So it's a win-win. It's a win-win. If Wall Street wins if you lose, the government wins if you win.
Yeah.
What can you do? So short-term capital gains, how can that affect your account negatively when looking at long-term, wealth building? What's the balance between short-term trading and long-term investing? How do you feel about this?
Yeah, I mean, any investment that I make, if there's a gain, I'm automatically like, all right, 40% of this is gone. Off the rip, right? That's if I'm thinking it's going to be short term. That's why I tell people, like, if we're going to do something, make sure it's a year and a day. And I'll get into a little story about how that actually benefited me when we get into some of these other topics. But you have to have these things in mind. That's part of the plan. It's like when Ian's saying it, he's saying it in a very calming voice, but he's being very repetitive about it. It's like, stick to your plan. Know your plan. Part of that plan, especially if you're investing lump sums of money, is to make sure that you have it in for more than a year and a day so that you can actually see the profits of what you've made, right? You don't want to have to, all right, well, I made 100,000, but it was within 6 months and now 40% of that's gone. Now I'm down to 60, but I'm still investing the other 60 and that loss is now I got to pay taxes and where am I going to get the money from? Now you're broke, but you thought you had actually made positive gains. And so taxes are part of it. Knowing tax codes and tax structure are a very important part of investing. And so make sure you keep that in mind whenever you're making a decision that involves money and investing in capital gains.
Yeah. And I would say this, ideally, it's always good to wait for a year and a day, but sometimes you just got to get out. Sometimes, you pay the cost to be the boss, but it's like, if you feel confident and you made, the money that you said you was going to get in to make, yeah, you could potentially wait and, not have to pay any tax, pay less taxes, or you could potentially wait and lose everything that you had just trying to wait it out for a year and a day. So, that's something to keep in mind. I think that the year and a day is a good goal, but even bigger than that is have your percentage goal. And even that could change depending on the stock market, the economy, different things. So you just gotta, when you gotta really focus on your investments, especially when you're doing short-term trading or swing trading. Just be careful, be mindful, and definitely pay your taxes.
Yeah. And that goes part of being in a plan, right? So if the percentage goal is the goal, then that's in your plan. If I have a 30% return and that happens within a month or within 2 months, then I'm getting out. But that's part of the plan. You see what I'm saying? And so it's back to that like early on. So we got a lot of newcomers to Market Money's tuning in. And so one of the first things we said when you're investing is like, before you enter any position, know where you're going to exit. So whether it's going to be a percentage, right? Whether it's going to be a time distance, know where you're going to exit. And so again, part of the plan, but having taxes as in part involved in that planning is vitally important. You don't want to actually have a gain and realize that you can't pay the taxes on it.
It's another reason why I tell people to go for longer targets, because whatever the financial target is that you hit, a lot of it's going away anyway. Going back to the scalping conversation that we had last week. And the thing with trading and investing, everything, if I can be just brutally honest, the people that succeed the most are the ones who don't adjust the plan at all. And I understand getting out if you think a move is going to break down, but your life is a hell of a lot easier in every scenario if you just let your targets run for a long period of time. I know you people may need a confidence booster. I'm not mad at that. But when I'm saying, hey, stick to a plan and not change, all these factors are baked in to why. Shout out to the snipers and people in Red Panda that have hit that Holy Trinity target 3 or 4 times in a week. And they're like, man, I've been practicing since last August and now it's paid off tremendously. Now, post taxes, you still have a big gain that you can be happy about. Do not deviate at any cost. And Troy texted me, Bitcoin hit 29,000. Shout out to Ally.
That happened.
Crystal Ball.
That happened.
Right.
He doesn't know crypto.
Okay.
Yeah, that actually happened at
21,000 the next.
So all right. You said 29,000 was a good buy point. So should people be buying at 29,000? Or is it going to keep going?
It's going. Well, if we can't continue this downward pressure, we're going to the price that I said a couple months ago.
What was it? 29,000.
20.
20,000.
So we're going to 20.
Okay. So 20,000 Bitcoin retracement to 20,000.
Might clip this up. I'll be real. I don't even care about being right no more. I'm just going to execute.
My name is my name. Tell him my name is my name.
I'm just asking a question. I was asking a question.
No. That's not true.
That's not for you. That's not for you.
No, I'm saying I was
Oh,
just
you
asking.
actually want? Yeah. Okay.
No, I was
yeah.
asking. It's 20. Is that what you're saying? 20,000.
Yeah, the institutional level is between 19,735 to 21 flat is a very good area to load up. At 29 is probably the second best area. Those are safe.
All right.
Yeah. So we hit that.
We're at 29 right now.
We are there currently at 29.
29,000 for Bitcoin. Interesting times we're in.
Yeah. Last week we were at 38. Now we're at 29. 3 weeks prior we were at 40. So we'll see where this is headed. At the same time, Ethereum is at 2,200. And so
my graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.